So real quick, what I wanted to talk about was trading plan. If you're making a trading plan, it's important to understand that you can make a trading plan based on two different kind of formats. You can make a trading plan that covers all of the patterns, so type 1, 2, 3, 4, or you can make specific trading plans for each individual pattern. Okay. Now you can make it as short or as long as possible. The thing that you want to keep in mind is you want to make it as simple as possible. Something that you could follow constantly all the time, every single day, that you can literally memorize. That you're not having to read like a whole book to understand it. Okay? So it could be as simple as like a checklist type of trading plan. To where it's either you could have it to where, let's say if you're doing a total trading plan, so trading plan for all patterns, you do like, let's say what are all common things that the patterns would have in common. So let's say for type 1 pattern and type 2 patterns, what are the common things that immediately they all have in common that you would need to have as like confirmations?
Directional bias.
Yeah, the directional bias, right? So directional bias, you would have.
Where's the trap? The trap, where is it?
Where the trap is? 5 or more candles, right, Ashley?
It breaks the Asian range.
Not really breaks the Asian range, because that would be more of a type 1 pattern. We're just talking about specifically what those two would need to have, would always have in common. So like, let's say another thing they would have in common is second leg being in either London box or US box. So
the 13 and the 50 crossover.
13 and 50, yeah. So then you're talking about entry stuff, right? So if you're talking about entry stuff, then you're talking about, let's say, second leg, you want to have a pattern, right? Either a railroad track or a star pattern, right? Or a cord of wood or a cow on specifically the second leg. So if you don't have that, then what are you looking for?
Higher or lower the day.
Right, you're looking for a close of price below, or a close below or above the 13. The 13.
Or like the high of the day kind of shit.
Right.
Low of the day.
Or you can use a 5 and 13 crossover. Right, that would be for the entry. And then, of course, you'd always have to wait for a pullback. And then type, let's say you could do another one for, let's say, type 3s and type 4s, right? So now we're talking same thing, directional bias, right? What else? We're talking about only most of the time one-legged patterns, right? Is what's going to happen. Yeah, tapping the 50 EMA on the type 3s, tapping the 50, pinning to the 50 EMA on the type 4s and type 3s. What else?
Tapping the Asian range, the middle of the Asian range.
We're not tapping. These are things that they would both have in common. So think about the things that they just have in common together. That they both are going to have in common. Not because then you start to get into more obviously individual stuff. But to be, let's say, to also be inside of the London or the US box, tapping about pinning to the 50 EMA would be a great thing that you'd want to have. And then obviously one-legged patterns you want railroad track, star pattern, cow, right? Something of that nature also they all have in common. So you can make it into a checklist to where if you're looking for a specific pattern, you're basically answering questions to yourself. Is you could put it like, let's say directional. So you can put like directional. You can put like directional bias, right? Buy or sell, right? Then you can have, let's say, you can have timing, correct? Yes or no. 5 candles between first and second leg, right? Yes or no. So if you can make it into, this, to something like this, yes, no questions. Is it pinning to a 50 EMA if it's a type 3? Are we pinning to 200, or are we having multi-session? So whatever the pattern specifically calls for, yes, no, it makes it very simple for you to take a trade without having an emotional attachment to the actual trade itself. Because you're making it very black and white. And that's the whole point. Is if the more black and white that you can make it, the more structure you're going to have when you're taking a specific trade. So that's why for me, like I like to have a quick, kind of trading plan for each specific pattern, because I can just be like, okay, if I'm looking for type 1, here's my type 1, kind of list. Yes, no, yes, no, yes, no, yes, no. If they're all checked, cool, I take the trade. If they're not checked, then I don't take the trade. So you're trying to take the emotional stuff out of the trading. And if you have a checklist, and a checklist that will give you a very good trade as long as everything is checked off, then you're good. It's either you take the trade because everything's checked off, or you don't take the trade because not all of it is checked. And so you have to set the requirement of how many confirmations do you need to actually take the trade. Do you want to have just 3, or do you want to have 5 or 6? And so all of these things are literally based off of the homework that you've already done. All those examples that you turned in for homework for, type 2s, 3s, 4s that you turned in for, I think it was week 3, week 4, you already have the examples. Just look at them. What are the common things that you see on all the type 3s? What are all the common things that you see on all the type 1s, on all the type 2s? That's by going through that homework that you turned in that you already have, is how you can determine what you need to have on the list. Because they all have things in common. So what are the most prudent things that they all have in common? You make the list, and that's it. And now you have a specific trading plan for 1s, 2s, 3s, 4s. And then now you take that plan, and then now you go back test. And that's it. You go back test it. What's the percentage? If you follow this plan, what is your win-loss percentage? If you notice that when you back test, if you notice that, let's say with 4 confirmations, or let's say 4 or more confirmations, you're at 90% accurate. And let's say with 3 or less confirmations, you're 60% accurate. Well, which one do you think you're going to take? The more confirmations that you have, the less trades you're going to take, which is fine, because we don't want to take a bunch of trades every week. You're just looking for like 4 really good trades that week. That's it. Nothing more. The rest is going to be determined based on how much lot sizes you use basically for your account. And that's completely determined by the balance of your account.
Mark, for the type, I guess it was 3 and 4, what did you have there? I couldn't quite see the bottom. I had like the directional bias, and most of the time the leg goes to the middle of the Asian, and the EMA pinning to the 50. What was the other confirmations that you had there?
So type 3 setups. So type 3 setups specifically, you're going to have the first thing is directional bias, right?
Hmm.
Second is you're going to have most likely a one-legged pattern. Okay, it's got to be pinning to the middle of the range. It's got to be pinning to a 50 EMA. You got to have the pattern itself, railroad track, star pattern, quarter wood, those kind of patterns. You could have TDI bouncing off the 50 line. That's a confirmation. Make sure it's in the London box or the New York box. That's the timing aspect of it. And then make sure that it's coming from the bottom or the top. So you don't want a type 3 that's coming out of the Asian range in the middle of the range. If it's doing that, you want it to come down and hit the bottom and get rejected, from the middle of the range. You don't want it to come out of the middle and then just automatically drop. And then for type 4s, you're essentially looking for kind of very similar things. So you're looking for a one-legged pattern, directional bias, the timing aspect, which is basically being inside of the box of primarily London. Most of the time is what it's going to be. You're looking for a pin to an EMA because it could pin multiple EMAs on that one. So not specifically to a 50, but just a pin to an EMA, which is basically what prevents it from going any higher to, like, let's say, become like a type 3. And so it bottoms out at the bottom or the top of the Asian range. One-legged patterns, railroad track start, pull back. Yeah, I mean that's pretty much it on type 4s. They're very similar to each other.
Yo, Mark, quick question. Could you pull up Pound CAD on Friday? I just want to show you a setup, and it's a psychological question, something that I can maybe try to avoid next time.
What's the question?
So I was in a trade in London. I got into the W after the low of the day was tested. And I mean, I kept it. I went to sleep, and then this thing came all the way back down and took me out, and then went all the way up. What I noticed is my problem is that I keep finding myself in the right direction, but I keep getting hit by these like traps,
Right.
and then,
So I guess the first question is,
yeah.
if you took this trade here, you took it during London, I assume, right?
Yes.
So where was your entry at?
So like you see that pin hammer, like when it hits the 50 and then goes up.
So
right
give me
after
a
that
time.
No, I think 5:15.
So this one here?
Yeah, I got in that little bit of a pullback that I.
Okay. So you got into a pullback on this one here, and
No, it was a buy. It was a buy.
It was a buy.
Yeah.
So I assume something like this is your
Yeah,
trade.
it was literally exactly like that.
Okay. So the first thing I would ask you then is basically 6 candles in, you're not in significant profit.
But the only thing was that I was gonna go to sleep, so I brought my stop loss a little higher, just so I didn't like worry too much about it, But
Right.
I mean,
so where was your stop loss at?
it was right below like the big green blue candle.
So right under here?
Yeah, right about there. Yeah.
Okay. So like here.
Yeah, something like that. And obviously it came back and.
Right. So if you notice, I mean, you have to notice this now. If you're going to go to sleep,
yeah,
right, and you're just going to let it ride, right? If you're going to let this thing ride, you have to understand that this is, something that could happen, right? So you really have two things happening. Either one, depending on the pair that you're trading, you give yourself the max stop loss that you could have on that specific pair. So if you're trading regular pairs that don't have a higher, lot size ADR, then you're looking at like 15 pips, right? Something around that range. Another thing is if you're trading like NZD pairs, Euro NZD, Pound NZD, or AUD pairs, then the max should be around 30 or so, right?
Mm.
But you also, I think you have to take into account is the 2 hours after you get into the trade. because if you were in here for 2 hours, you're only up, 10 pips or so.
Mm-hmm.
You're not in significant profit. So you'd probably at that point take yourself out. You know what I mean?
Yeah.
So, the question becomes, do you specifically, are you okay with maxing out your stop loss to give you a chance, or you could actually lower your lot size because you're going to sleep?
Mm-hmm.
Do you get what I'm saying? So you're automatically reducing your risk. So if you reduce your risk, it gives you an option to give you more of a stop loss. Do you get what I'm saying? So if you're going to sleep, do half the lot size that you would normally do, unless you're not willing to wait 6 candles.
No, I'm pretty. If I do go to sleep, I get very conservative, So yeah, it just.
So I guess also is this like a normal thing for you to go to sleep?
I mean, not really. By the time it gets to New York, I've already I do one session,
Yeah.
But like you said, I should be in and out of the trade in like 2 hours. It shouldn't be 6-7 hours.
Right. So I think if you plan to go to sleep, if you plan on going to sleep,
Yeah.
then you should plan to be up for an additional 2 hours, before you go to sleep. Does that make sense?
Yeah.
Because I mean, this essentially could have been just, you could have taken yourself out at 10 pips or whatever at 6 candles. Because what's 6 candles? 1, 2, 3, 4, 5, 6. So you could have taken yourself out at 6 candles here, and you would have basically missed out right there. You know what I'm saying?
Yeah, I could have avoided it.
And it would have been basically like a break-even trade instead of a loss. The other thing that you could do is you can put in an entry of a buy limit instead.
And that's what I was thinking when I woke up.
You get what I'm saying?
Yeah.
Because if you're going to sleep, this is not, the ideal place for you to enter would be somewhere middle of the candle. You get what I'm saying?
Yeah.
So like somewhere in the middle of the candle, now you can go 15 pips out, and now you're not even in the danger.
Mm.
And then you can let it run. Now you're looking at something like that. So then at that point, you're not getting into the trade, here. You're getting into the trade when it's hitting down here. Does that make sense?
Yeah, it makes sense. 100%.
Obviously, you don't know if it's going to come back down and hit it or not. But the point of it is that you're okay if you miss it, because the entry that you really want is down here. And that's the entry that makes sense.
No, when I'm trading, I always hear your voice in the back. So yeah, it's always appreciated,
Yeah.
Yeah, but it's yeah. Sometimes it's just the traps, They like, you think it's the move, you think it's the one to go, but they go a little lower, more liquidity, and then they'll just go up.
Yeah. So I mean, you have to think about, why are they going back here again? Because they just don't have enough people to go in to begin with.
Yeah, because they would have already went if they had enough contracts.
Right, exactly. They would have already, this would have already kept going up if they had enough people already.
Yeah, okay. I'll keep that in mind for sure. Thank you.
Yep. Anybody else? All right. Nobody else has questions? You guys have a good one.